Thank you for tuning in to another edition of the Vulcan Report. This is the Vulcan Report for Monday, September the 20th. Hopefully everyone had a wonderful weekend and you're ready to start the trading week off in a positive note. I want to address a few things, and it may take me a few videos to do it, so let's just get right into the meat here. There's been a lot of reports out concerning the current state of the markets. And although it's true that there's been a lot of bearish positioning as far as the purchases of put options and things like that, that doesn't necessarily mean that the market is going to go down, okay? What I mean by that is that just because someone decides they want to buy 1,000 put options on the S&P 500, that does not cause in and of itself the S&P 500 to go down. What causes the markets to go up and down is buying and selling. If there are more buyers than sellers, markets go up. When there are more sellers than buyers, markets go down. If a market is still being accumulated, it doesn't matter. Its prices are going to go up. Okay, supply and demand. Markets can stay overbought for an extended period of time. Markets can stay oversold for an extended period of time. The only way you know that a market is going to turn is if you start to see more selling than buying or more buying than selling. Case in point, the chart you're looking at right now is the S&P 500 ETF, ticker symbol SPY. What you're looking at is a chart that starts from here, March the 2nd of 2010, and goes all the way up to the last bar here, which is May the 7th of 2010. You will notice that, as I make this bigger so you can see it, as you see here, these white candles represent overbought condition in the S&P 500. Notice how many white candles you see. Notice how the market continued to go up for weeks before it turned down. So again, you got an overbought condition dated March the 2nd. Okay? You're overbought. Alright? It was official on March the 3rd. Alright? Technically overbought. We did not leave that condition until we hit the month of May. Okay? March, April, May. That's 60 days. Here we are, May 3rd. From March the 3rd to May the 3rd. Okay? That's when the market decided to turn. So the markets can continue to go up, up, up as long as there are people buying it. Take, for instance, gold. It continues to go up. Technically, even though the market's been overbought, it still goes up. Regardless, okay? Fundamentals don't necessarily come into alignment with technicals and vice versa. Case in point, the bull market of the 90s. The NASDAQ continued to hit new highs even though the fundamentals did not support that particular market. And when the NASDAQ topped out at 5,000, people were even more bullish than before the market turned. They said it would go to 10,000. All right? So you won't know until the picture and the landscape changes before the market's ready to turn. Refusing to buy a market that is being accumulated, if you're a trader, is tantamount to utter and complete foolishness. As a trader, you must be long when the market is being accumulated. You must be selling short when the market is being distributed. It's just that simple. All right? So, again, here's the S&P 500. It continues to go up. On March the 3rd, it hit a high of $112.97. When you come over here to May the 3rd, we topped out at $120.68. So you're saying you would miss out on that much upside. If you're a trader, that would be foolishness. Okay, that's money on the table for you to take. Likewise, when the market turns bearish, as you see here with this pulse wave right here, we broke through that bearish pulse wave and continue with the downside on May the 4th. That's when I warned you guys that on May the 3rd, I remember I told you that we were ripe for a humongous volatile situation, and then we got it. It started on May the 4th, continued into May the 5th, and then on May the 6th we had the flash crash. Okay, these pulse waves here are no joke. They let you know when the market is poised for big moves. Likewise, when you see these positive and negative swing VIXs, these positive and negative swing VIXs show you when there are bot checks in the market. A negative bot check means that massive short positions are being accumulated. A positive bot check means that massive long positions are being put on in the market. Okay, so when you see that, that's what it's telling you, so you can be cautious and know what to expect going forward. Okay, again, a negative swing VIX bot check means that massive shorts have been sensed in the market. A positive swing VIX bot check means that there is long positions being put into the market. Okay, that is to warn you of what is to come. Likewise, you got warned back on April the 28th that there were some longs being accumulated. But then I told you on May the 3rd that you could expect humongous volatility because we had entered into a pulse wave scenario. Then we got it. Okay. Now, fast forward to today, S&P 500. Friday's close on the 17th, we're in an overbought scenario. Looking familiar to you? It should. We're overbought. However, we don't have any positive or negative bot checks to speak about. But we do have a pulse wave scenario coming into Monday's trading that we have to be mindful of. That means the market is poised to break out either to the upside or to the downside. And we want to be ready so whatever way it moves, we can capture that momentum. So, excuse me, coming into today, if you're flat the market, which you should be, because the system was telling you to do that last week, you would see here that on the S&P 500, we're looking for a pulse wave of $113.29. That means we will go long there. And we're also watching for a break below 104.31 this week. So this is the weekly pulse wave inflection points that we're going to be watching for this week. There is a very strong chance that we're going to trigger the long side before we trigger the short side. So we have to obey the system, and we have to trade in the direction of the prevailing trend. So be encouraged, and more videos to come. Remember, take what you can, give nothing back.